Let's come back to Nigeria. The government successfully floated a 2.25 billion Eurobond, roughly $2.3 billion last week, posting some 400% oversubscription for the two long-dated instruments. The African sovereign bonds market have gained about 20.45% since the year started, by the way, and that's driving investors' demand, with Ghana, Zambia, and Morocco posting double-digit returns after restructuring and those rating upgrades for those three countries. Now, discussing the Eurobond market with me now on the show is Lanre Buluro. He's the managing director in charge of investment banking at Chapel Hill, Denham. Thank you for coming in.
Thanks, Bosun. How are you?
I guess this is going to be about the first or second time in the year. You've been busy chasing deals, so now I've got to chase you for an interview.
Just
it was all chasing you last week. I'm sure you were all busy last week.
It's a hectic week last week.
Very hectic. But congratulations, by the way.
Thank you.
I'm sure Chapel Hill was the lead institutional arranger for that Eurobond.
Well, we worked collectively with some other foreign lead arrangers, but yes, we were the Nigerian book runner on this transaction. It's our fourth transaction work with the sovereign, and we're really pleased of the outcome. With every other transaction we've been on behalf of the sovereign has been very successful. Last week was one of them, and was a
we're well together on this, so I understand. Yes. And we see Chapel Hill on the street. Everyone understands the size and what you bring to the market when it comes with working with the MOF, the DMO, and others, and other government agencies to ensure we have a successful Eurobond. But let's talk about the Frontier Africa's Eurobond so far this year.
Very active year, and I think just beyond Frontier and Africa, the whole emerging markets. And I think a key driver is the outlook for rates. I think you've seen what the U.S. Fed is doing. The ECB have all signaled cuts and outlook. So next year, people are thinking U.S. Feds will be around 3.5%. ECB around 1.75%. So credit yields are tightening. Issuers are not taking opportunity of that. Of course, advisors are continuing to advise their clients. This is probably a very good time for you to issue at appreciable rates. And there's strong demand. I think investors looking for yields. It's a great opportunity for them to lock in rates, because this same time next year, very likely similar instruments will be priced lower. So from an Africa perspective, I look at Kenya. Kenya did something in October. Angola also came to market. Similarly, Egypt. Yeah. And then on the corporate side, we've seen, we saw Seplat sometime this year. Yes. Axiom Telecoms is an Pan-African telecom business. They also issued. And we think before the year runs out, there'll be a couple of more corporates in Africa that will tap the market.
Do you think there's some of the headlines says there's what you call the strengthening conditions? We've seen inflation. We'll look at Kenya, Zambia, Morocco, and a few countries that have been able to bring inflation a little bit under control, in a manner of speaking. Look at the Ghana cedi, for example, Zambia, and a few others, and you're saying, oh, look, it looks like reforms are beginning to work across a number of African sovereigns.
Story is improving, and I think Nigeria is a case study of that. And there's a lot of chatter around the Eurobonds. Is it overpriced? What happened? I mean, if you benchmark to the same transaction we did last year for the sovereign, we issued a 10-year bond last year at 10% plus. The same 10-year we did last year.
$500 million.
Correct. Same 10-year we did this year, priced under 9%, about 8.603. So the credit story is improving. Our macros, the reforms that we've been talked about all year, are beginning to kick in. Inflation is coming down. The currency is stable. It's more liquid. It's a market-determined price. GDP is rising, so the indices are there, and again, it's going to continue to improve. I think investors did notice that. We got upgraded from a rating perspective, and that also added to what you saw last week. Despite the chatter from a geopolitical standpoint with the U.S. government, or should I say, Trump tweeting, investors are about yields and also confidence, right? So if the macro is wearing as great or wasn't conducive, I think with a price higher, I don't think the demand would be as strong as we saw at that transaction.
It's very interesting how we're seeing this renewed appetite for Africa's Eurobond. Even for French-speaking West Africa's central bank did €1 billion just about a few weeks ago, and that was highly successful. So everyone's looking at, it looks like investors' appetite for Africa's sovereign Eurobonds coming back very strongly. But let's come back to what we did last week. The order book was 2.3. Plus roughly 13 billion on the table.
At peak, yes, to about 13 billion. I think I also need to provide some additional context, right? In that demand book, 1.4 billion came from Nigerian investors. So Nigerian investors actually supported the sovereign very strongly.
1.4?
1.4 billion. So evenly split between the two tenors. And it's, again, it's an appreciation of the macro story. The yield also is definitely something that they found quite attractive, in terms of other options. In terms of pricing, the 10-year price quite flat to the curve. And people need to understand that there is an existing yield curve. We saw early this year around when Trump was really talking about tariffs around the world. Globally, you saw volatility in yields.
Yes.
At peak, I think the sovereign yield probably touched around 11%.
Yes.
And since, with the macro story improving and, kind of calm nerves around this whole Trump story, it normalized. But there was no way, I know, again, people were talking around, we could have done a little bit cheaper. On the 10-year side, we were flat to the comparable tenor.
Single digit.
Correct. So the 34s were around 8.6, and we priced flat to that. The 45s were a little bit, under 9, and I think on the longer end, but I think to keep investors in the book, I think that was the price that they felt was quite attractive, about 9.12. Well, we opened at 9.2 in terms of IPTs, but we priced a little bit tighter and closed around 9.125.
Interesting. So you think that's really competitive within the Africa's sovereign bond?
Given our credit rating,
so yes.
given, compared to comparable markets, yes, for that tenor, again, it's a 20-year instrument, so people need to be mindful that it's longer dated. You need to give a little bit more for folks to go that long on your instrument.
What's the Nigeria story? And I'm sure you spoke, you folks who speak to international investors, it's not just about putting money on the table. They want to know what's the Nigeria story and all that. Give me the backstory to last week Eurobond of that $2.525 billion.
Well, we go back to weeks ago when we're at the World Bank, again, is the economic reforms. I think there's confidence and the data is there to back it. 18 months ago, 24 months ago, we know what the exchange rate was. The availability of the exchange rates we saw was pretty much practically nil. Now you can go to the market, you want to buy, no one's hoarding foreign currency. Inflation is tracking down. We'll love for it to track a little bit further down. On the monetary side, we're seeing, the monetary policy hawks become more dovish. There's an MPC later this month. There's plans or hopes that might be additional cuts. All the metrics are pointing in the right direction, and I think one or two things. The tax reforms, the new tax act is also something people are quite looking forward to. Growing from a tax to GDP standpoint, the outlook is supposed to be much more higher. One or two things in the tax act, I guess, is literally causing a little distortion, particularly around capital gains tax.
Okay.
We're hopeful that the government will provide some clarity on that.
As we go towards the end of the year.
Yeah, into the new year, there's chatter around, probably a step back in terms of what that would be, because that has caused some jitters, particularly around foreign portfolio investors in our equities markets. We've seen the market, and I saw you earlier talk about a lot of reds.
Yes, in the stock market.
The strong 9 months. Now all of a sudden we go to the last quarter, and that could be a factor. Could be a lot of foreign portfolio. I speak to my trader, right? The flows we were seeing early this year from foreign portfolio investors has slowed down. And it's a case of wait and see, because there's still not clarity on what that will be and how that will impact the market. So I think government is very mindful of that, because whilst the monetary policy authorities have done a great job around
the central bank,
in particular, right, around FX, and it's a combination of a lot of things, right? So we've seen oil and gas production go up. We've seen, the CBN just letting go of structures that were in place that were causing
around
exchange rates.
Yeah.
A big component of what we've seen also is the flows. People call it hot money, but for us it's flows, and it lubricates the whole system. And the moment that flow slows,
and those repayments that we did with the aviation folks and all
exactly.
The airlines,
so all the forwards, everything that's been sorted. Foreign portfolio inflows has been quite strong, and I think we need to keep that going for us to have a very smooth exchange rate and from a liquidity standpoint.
Dig more about the Eurobond for me. What's the country's total portfolio right now, and what's it like in performance year to date? Broadly, Africa speaking about 20 to 20.5%.
Yeah, I mean, listen, I mentioned earlier, right, during, sometime in April it peaked when there was a lot of volatility and clarity around tariffs and everything at macro levels.
Trump,
so I think we hit around 11%. It's normalized now. I think it's, sub 9. From a quantum perspective, I think we're over 19.6 billion. And this is counting the 2.3 we just issued now. There is a 1.1 billion maturing in 2 weeks. Yeah, in 2 weeks' time.
Towards the end of November?
I'll probably say November 21st, 22nd. I don't know what date that is, but and the sovereign has always paid as a when due, so there shouldn't be a problem redeeming that particular Eurobond. I think so. Net of that particular maturity, we should be around 18 or circa $17 billion in terms of outstanding Eurobonds.
And are we performing on that?
Oh, no, they're performing well. In terms of yields, again, look at secondary market, they've all normalized. I think the 51s are around 9 or around 8%. So the curve is normal. It's and again, it's just a function of confidence and the comfort investors have in Nigeria.
Look a little bit into that $1.4 billion, like you said, from Nigerian investors for last week's Eurobond. That's quite a big story.
It is, and I think it's something that's...
Was that from institutional?
Oh yes,
Retail,
I mean yes, I mean this instruments are catered to institutional investors. So it's a mix of banks, a mix of our pension funds, asset management community. I mean there's a big dollar portfolio that they do manage. We do have some corporates who have some dollars they intend to lock and invest in. So it's a myriad of those investors that are usually the ones that you see in our Eurobond transactions, but predominantly all institutions.
Okay, so how much impact does the direction of the U.S. interest rate? And you mentioned some of this at the start with where the U.S. is going this year into New Year. At least 3 or 4 of the global central banks, the Bank of England, the ECB, the Fed, maybe the Bank of Japan, as it were, or the PBOC in China. Again, the dollar behavior itself, which has been a little bit volatile in recent times, again, with the geopolitical issues, the trade issues, the U.S. government shutdown issues, and all of that. How much of this interest rate and dollar behavior impacting a Eurobond market for Africa,
big
for
impact.
Nigeria?
No, big impact, and I think for just emerging markets in general. So all these instruments are benchmarked against the USD. The dollar itself has been weak year to date. I think it's probably off 3%. In terms of the yield outlook, I think Trump is guided, right? It was actually at some point there was a particularly dissenting Fed member he was trying to get rid of. There's going to be another rate cuts. I mean, I think they've guided for that. And I think the outlook, again, next year, this year they will close around sub 4%, but we expect by Q2 next year, US Fed should be tracking around 3.5%. Similarly in the ECB, and I think a lot of people are taking cue. One, it's their own internal concerns around inflation, also internal controls around what they expect the GDP growth would be.
Jobs and all
that. So there are a lot of metrics that's driving that. I mean, Trump, his goal is to try to get as cheap financing as he can get for the citizens of the U.S., right? So, and he has been very bullish about that. He's signaled that. So I think investors, global investors are kind of baking that in and thinking if this is where the U.S. Fed rate would be next year, then any instrument that's providing you a good premium above that, lock it in.
You better lock it in.
Correct. Correct.
Let's take these conversations a bit to the subnational level with the Lagos State doing 200 billion infrastructure green bond. Walk me through the key details and the facts behind this offer by Lagos State government.
So Lagos State, as you all know, I mean, is I'll probably say one of the most disciplined users of the capital markets. They've been quite active. There's about 350.
Historically speaking.
Correct.
In
350,
Nigeria.
correct.
Yes.
350 billion in outstanding Lagos State bonds. Historically, they've raised over almost up to 1 trillion naira from the capital markets. This is no different. So it's a dual transaction. The state is issuing a green bond, the first subnational green bond. It's a small tranche, about 18.5 billion. That they're looking to raise, and it's to finance green projects. The state has been one of the very forward-thinking from a green economy, from a blue economy, and infrastructure in general. So the proceeds will go to green infrastructure projects. It's a 5-year bond. priced, quite close to the sovereign, and it just speaks to the credit quality of the state. AA rated. There's a security trust structure around it, an ISPO that's also guiding this. They're also doing a $200 billion conventional bond. That's a 10-year instrument. Again, from a pricing perspective, I think the guidance that was given, the high end of the guidance, was about 16.25% for a 10-year instrument. We need to also flag that with the new tax act starting next year, January, state bonds are tax exempt. So I think investors should definitely be able to look at this from a growth basis.
Yeah, if you're exiting risky assets such as stocks,
correct. Correct. So
you've got a window.
Correct. So one of the new additions to the tax act is the fact that subnationals that issue bonds will be tax exempt. So I think from a pricing perspective, from the quality of credit, this is a good one.
If you're doing $1 trillion IGR, I can give you 18 billion.
God bless you. So it's one of the things where, I tell people this, Lagos State is one of the least, or if not probably, states that's correlated to oil prices. So despite oil prices being up or down, the state is growing. IGR is growing. I think in terms of its revenue profile, 75% of it is IGR and 25% is from the center. So irrespective of what happens at the center, which has been very, very strong this year. I mean, a lot of state governors are very happy in terms of the allocation they've been getting. The state's IGR is multiples of what they've gotten. So it's a very strong credit. It closes on Thursday, and we implore investors to support the state as they've always had when we do come to market.
Would you folks, the investment banking end of the market, be asking more state governments to come to the market? So there's a window for this.
Yes, we're working with some states, and there are various constraints around, and you look at the new ISA, put out by the SEC early this year. That was signed into law. There are various criteria for states, and they've relaxed it a little bit. It was very stringent in the past, but there's some work to be done. There's some states who are not up to date on their pension obligations. The biggest investor group in Nigeria are pension funds. And rarely do you get a fully subscribed offer if the pension funds don't participate. As a state that's not PENCOM compliant or pension compliant, pension funds will not participate. So a lot of, some of the state governments we're working with to try and get their obligations up to date, and we'll be able to bring them to market. There are other structural issues around them issuing. Again, we are working with some states to be able to bring them to market. Unfortunately, right now, Lagos State is the only state that's able to tap the market just because they tick all the boxes. And we're hopeful that other states will follow suit.
Will follow. Broadly speaking, 1 minute or less outlook on 2026 Eurobond market. When is Nigeria heading back to the market? Anytime soon? 26, 27?
Our borrowing plans are as instituted in the fiscal act as instituted in our budget. So we have a domestic tranche and a foreign tranche. Yeah. So I think if and I know the government is working to release the budget very soon. Very likely they will be tapping the market next year. And they will look for the conducive market opportunities and market conditions to tap. From an outlook perspective for rates, both domestically and globally, rates are trending downwards. And I think particularly domestically, with the reforms and what's happening today, inflation tracking downwards, a dovish monetary policy, rates are going to be low. And I think it's an opportunity for investors that whatever is available now, corporate, subnational, invest and lock in. Because, there's a world where by Q1 next year, you could see benchmark rates around 13, 14%.
Ooh.
That's Q1, and I think half year could be further down.
Wow. Lock it out.
Yes.
Okay. It's great.
Thank you.
Thank you. It's nice having you here tonight. I'm sure it's a busy week, but it's good to have you here on the Monday.
Thanks for having me.
Thank you so much. We appreciate those insights into the Eurobond market. Thank you, Lanre Buluro, the Managing Director in charge of investment banking at Chapel Hill, Denham.